Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery joins Kalyani Bhatia, Head of Business Innovation for the Americas and UK region at SWIFT, to examine payment transformations across the globe. Topics of discussion center around key challenges with payments, optimizing newer technologies, enabling instant and frictionless payments, and more. Listen in to this lively discussion.
Welcome to the podcast, Kalyani.
Thanks for the invitation, Craig. It's a pleasure to be here.
I am excited to talk about payments transformation at SWIFT. I know there's a lot of good stories here. But before we get into what's changing with payments and how should we think about it, maybe you could give the audience a little bit of background about what you're responsible for at SWIFT.
So I head up a team of pre-sales market experts. We're called the Business Innovation Team. We cover the Americas and UK Ireland regions. And essentially, we look after topics like GPI, ISO 20022, my standards, instant payments. So anything in the payments space is covered under my team.
Excellent. Can you give the 10-second definition of each of those, like global payments, ISO?
Sure. So GPI would be our global payments initiative that we rolled out in 2017 that essentially talks about tracking and tracing of payments. ISO 20022 is the migration that's happening for a lot of financial institutions through 2025. A lot of the MT category 1, 2, and 9s are going to be disappearing or retiring. So that's a major initiative for our financial institution community. My standards is where we have all of the standards up for all of the market infrastructures that financials can go look at the actual user guides, the actual messages, and test with them on the platform. And of course, instant payments is all about, getting all the friction out of payments and making things as real time as possible.
Thanks for jumping into those. I know some of our audience is really familiar with those terms. Others, it's a new introduction. So, as we think about payments transformation at SWIFT, maybe we should start with what are the challenges with payments? You mentioned friction, so maybe you could just talk through what are corporations and what are banks seeing as the challenges with payments?
Sure. So I think the overarching theme that we are seeing is the availability of seamless real-time experiences for consumers, fueling expectations for the same level of service and experience in financial services, both in the corporate and retail sectors. Clients' needs are changing, and there's little tolerance for friction or unpredictability. The growth of digital and e-commerce marketplaces and the evolution of real-time payment schemes will lead further momentum in the growth of real-time payments. So if we drill down and look into cross-border payments specifically, we're facing a lot of challenges right now. So maybe as a quick refresher, a cross-border payment, a payment that originates in one jurisdiction and is credited to an account in another one. And they continue to be way more complex than domestic transactions. So why is that exactly? Well, they could bridge the world's 180 currency systems. They could cross time zones, be subject to local currency controls, or have documentary requirements and compliance checks. All of these variables add friction that can lead to significant delays, costly repairs, and uncertainty about final receipt of funds. Now, the industry has done a lot to remove friction in cross-border payments, but there's still a lot more that we can do together to improve. We've actually done some in-depth analysis on friction at SWIFT by looking at data captured by the tracking codes on our GPI payments, and our data is showing that regulatory barriers and capital controls are the most significant friction impacting speed and delivery. Clearly, these are the domain of local regulators, and the banking industry cannot solve this issue alone. What the industry can do, though, is speed up responsiveness to requests for documentation and try to smooth the path through the process. Our data also shows us that currency controls are the most significant friction impacting speed. So if we look at a couple of examples, we exclude countries with capital control restrictions from our analysis then actually 57% of GPI payments arrive in under 30 minutes, regardless of geography or routing. If we look at transactions between mature markets with none of the frictions of currency controls, legacy systems, or compliance stops, we see significantly higher performance. For example, 72% of GPI payments from the UK to the US arrive in 30 minutes. Similarly, time zone differences contribute to delays. Analysis of the data show that payments following the sun arrive more quickly than those traveling against local operating hours. Improved data standards, notably ISO 20022, will greatly ease the flow and handoff of data across the ecosystem and facilitate automation. Finally, I would be remiss if I didn't mention compliance in a world experiencing continuing high levels of financial crime. Compliance-based queries also represent a significant block on cross-border payments. This is an area where SWIFT is already playing an important role by providing mutual, non-competitive services for Know Your Customer, sanction screening, and reference data checking that spread the cost of development for the industry. So Craig, as you can see, there are a lot of challenges in payment facing the industry today, and key reasons why SWIFT has made a step change in our overall strategy, which was approved by our board last November. Our aim is to deliver instant and frictionless payments, account to account, anywhere across the world, underpinned by the rich data provided by ISO 20022, moving away from point-to-point messaging and instead moving to transaction management and orchestration. I'm really excited for the opportunity to talk through some of the details with you today.
What I heard you say, your goals were to meet the challenges of friction, delays, and opacity was faster, easier, and richer information. And you gave a few examples about, the cross-border GPI payments and some of the speed that you've learned there. How is SWIFT going about, adding value with APIs, for example? And, you can answer that either directly or if you want to talk about what the board had decided earlier with the platform, the payments platform that you alluded to.
Sure. Let's talk about APIs. So APIs are a strategic channel for the SWIFT community. API-driven open banking is mandated in an increasing number of jurisdictions, and SWIFT has significantly invested in API technology in recent years to deliver to its customers real-time, flexible access to innovative new products. Adoption and usage of our platform significantly increased throughout this year, with almost 2 billion API calls made by users in 2020. API services on our platform are not only offered by SWIFT, but also by trusted third parties, so our community can benefit from a breadth of innovative solutions on our platform. The importance of our API channel will only increase moving forward as we expand the range of products and services that can be accessed via this channel. In fact, SWIFT users will be able to interact with our future transaction management platform natively via our API channel, enabling the SWIFT community to deliver smarter services to end customers, reach into new markets, and reduce the operational and capital costs of technology. We also have been working with a group of banks and corporates for the last 6 months to develop a portfolio of bank-to-corporate APIs in payments, treasury, and trade.
The distinction between the MT message types and API, maybe it'd be useful to just talk about that a little bit. Maybe I can begin and you can correct or enhance the discussion. So you mentioned that some of the MT message types, the 100s, 200s, and 900s are going to be sunsetted in 2025. So these are the legacy formats that are these delimited formats that were messages that would be sent from one party to the next and confirmed in a very linear fashion. And APIs are more real-time, this application programming interface going back and forth. How is this changing what SWIFT is doing, and thinking about? Because you have mandates in different countries, you're fully supporting APIs, and yet you have this rich legacy that many banks, or all the banks essentially, and many corporations are familiar with some of these old linear step messages, right? Which can't support some of the goals that you talked about of faster, easier, richer. The old formats can't support that. I don't know if you had any comments on that.
Yeah, and listen, our reach of our network, we've got 11,000 institutions on the network, and not everyone is ready at the same time to take on these newer technologies. And so that was really the crux of the problem, and where we've established how we're going to upgrade our existing platform to be able to help the community along on this migration to ISO, essentially. So that's why we've offered some optionality for our banks. If I'm a bank who's ready to go ISO right now, when the platform is available next year, that bank can continue to send their ISO messages as they choose. But if I have a key intermediary or an intermediary bank that still wants to stay on MT, they can do so on the platform because we allow for multiple channels, and we will mediate who gets what based on the option that a bank has chosen. So a bank can choose to send MT up until 2025. They can send ISO messages right from the get-go, and we've also now introduced an API channel. So there's multiple channels that they can get access to this data, and to your point, it's to be able to access that richer data if it comes in ISO, to be able to grab that and take advantage of it right away, whether that's through ISO or APIs. And what we do suggest to our banks that are still staying on MT is make sure that as they're putting their projects together to do the upgrade, think about also the compliance and regulatory and archiving requirements to make sure that they can take advantage of the richer data as soon as possible.
Here's part of my understanding, because we've talked to Swift a number of times, but this idea of you can start, let's say you start with an ISO format, an enriched format, maybe it's coming through in XML, you have a lot of data. Let's say you have 20 fields of information that wouldn't necessarily go through on an MT format, the older style format. If I start off with those extra 20 fields of information and I go through a normal linear process, when I step down to an MT message, it doesn't have a place for those, so that information falls on the floor, on the cutting room floor, and it wouldn't get appended as it gets handed off in a linear way one to another.
I listened to the webinar that you ran earlier in the month with my team member Daniel Lynch, and you talked about the telephone game. So that's the analogy for the point-to-point messaging. So I start off, I whisper a message to the next person, and they carry it on and on and on, and by the time it reaches the end, it's very different than how it started, right? We all remember the game. So with transaction management, we're now moving to this concept away from point-to-point messaging. It really hinges on the fact that I'm keeping a master copy in the center that all of the parties in the payment will have access to, but it's one version of truth. And what that does is if somebody starts it off as ISO, I've captured all of those 20 pieces of information. The next bank in the chain is MT, and they may not utilize and may not have access to that information, but I've still got it in my master copy, that single version of truth. So I won't drop that information, and as the payment continues, I'll still have that in the payment that you can have access to. Even the beneficiary bank at the end will then have access to that information. So that's the change in our strategy, going from point to point to transaction management and overall orchestration.
Yeah, because like the telephone game, point to point is it's handed off to another area. They may change it or information may drop. And when information drops, in the historical sense, it never gets added. But in this transaction platform, this engineered database, you can still access it. And I think that's a key to some of the other enrichment items that you've built into this. If a payment goes through and it's at the third bank, and something on the compliance side is missing, how does that get repaired in the normal or the traditional world, and how does that get fixed in this transaction platform?
So essentially what happens is banks will continue to send messages as they do today with the sender and receiver in the appropriate blocks, but Swift will redirect that traffic to build that transaction copy and keep that information. So the reason why we recommend that even MT, banks who want to stay on MT, think about your compliance. What we're asking all banks to do is, we talked a little bit about senders, that you could send in any of those, you could send a message in any of those channels. Where the difference is on the receiver side, we are asking receivers will be able to get an ISO message, the message via API, and they will get a multi-format message, which is essentially an ISO MX message with an embedded MT. So then they will need to take that MT and consume it as they would. But they also have the MX portion to be able to run their compliance and make sure that those are happening appropriately.
Excellent. I guess we've already talked a little bit about some of the newer technologies, because it's you talked about a transaction platform and being able to send it in almost any format and receive it in multiple formats, in multiple channels, right? Through ISO, API, or through some other options. But how is Swift optimizing these newer technologies?
So we actually do play a role in assessing emerging technologies. We're working with the global financial community to harness these for innovative solutions that can solve industry challenges, operate at scale in payments, and transform the services that our community offers its customers. The platform that we're developing is actually a great example of this. So we're combining new and current technologies with a change in the approach for end-to-end processing of financial transactions, all to further improve the end customer experience. Our enhanced platform will orchestrate interactions between financial institutions and other participants to minimize friction, optimize speed, and provide end-to-end transparency and predictability from one account to another anywhere in the world. This move has the potential to power instant and frictionless transactions between at least 4 billion accounts serviced by financial institutions across the SWIFT network. The next generation digital platform will use APIs and cloud technology to provide a set of common processing services that banks have historically invested in individually, saving the industry time and money. New and extensive data capabilities will enable the pre-validation of essential data, fraud detection, data analytics, transaction tracking, and exception case management. The planned platform capabilities build upon Swift's successful Global Payment Initiative, or GPI, which enabled end-to-end tracking on international payments. I like to kind of use the FedEx for payments analogy to describe the service, where we add a unique transaction reference to the payment that you can track and find where it is anywhere along the payment chain. We will leverage the cooperative's unrivaled industry reach with over 11,000 financial institutions operating in over 210 countries. We are known for our security, our standards, and responsible innovation. We are governed by the right levels of risks and controls. Users will benefit from the capabilities with minimal disruption through backward compatibility.
Now, you mentioned a couple of things there that I wanted to dig in a little bit. You mentioned tracking, this idea of visibility. I mean, I know people are going to be disappointed that we sent a wire and we don't know where it is. It hasn't been received by our counterparty, and now there's visibility there. How does that tracking work? That it provides that visibility through all the handoff points.
So we've actually asked the community to add in a UETR, so a unique end-to-end transaction reference on all of our GPI payments. So once they sign up that they want to be part of this Global Payment Initiative, we add this tracker to the payment, and essentially what that does is very quickly link all of the payments together so that you can find out, you can send, hey, I'm looking for this UETR, or when you're talking to your other banks, say, look, I don't know what happened. Where is this? Did it get stuck in investigations? I'm expecting it to hit today. And you can actually find where it is very quickly in the payment chain and to help you with where it is.
How do you find it quickly in the payment chain? I understand the number. But if it's a linear process and a number goes through and it's going through 3 banks and 2 correspondents and eventually to the end customer, how would that be reported? In the end-to-end world, is that possible to use that? Or is that only in the new the new type of environment?
So no, it's available today as part of the Global Payments Initiative, and we have what we call a GPI tracker. And in the tracker, if which you can access either through a GUI or through API, you can actually say, I'm looking for this payment, and it gives you a metro line, a really nice, here are all the stops that are in this payment. Here is where it is today. At each stop, it will tell you, as long as you are within the payment chain, you can see this data. It will tell you, where is it going? Who did it come from? Some of the transaction details, what are the fees? What was the amount? And it will actually give you a nice metro line, very visual way of seeing where it is so you can quickly access to it if you want to look through the GUI, or again, if you want that information through the API.
And so does that show every stop where it's intersected with SWIFT, or?
A very good question. And we've actually now made some enhancement to the tracker where it will show you where it dropped off to, so say it went to domestic market infrastructure. So it went off SWIFT, and when it came back on SWIFT, it will give you that information as well.
Excellent. And so for the corporate treasury people out there, domestic market infrastructure refers to some examples. Would that be like the FedWire system in the U.S. or? Okay.
Correct.
So that's the broad definition for all the in-country payment platforms that exist everywhere. Okay.
Correct.
Excellent. I had another question for you too, if I can keep asking you. On the pre-validation, what is meant by pre-validation? And that's an additional service. So what is that doing, and how is that enriching the process?
So pre-validation is another service that we have that really looks at how can I reduce the friction, the stopping points, and pre-validate that payment before it gets out the door.
Every error creates a defect which blocks something. This makes it so it's more likely to make it.
Exactly. So, and some of them would be examples, would be beneficiary account number, some pop codes, by country. So those are some examples of what we've identified as large hitters in the friction space that we offer as part of pre-validation.
I like the term large hitters. Things that cause more defects and problems. I like it. Kalyani, this idea of these changes that SWIFT is doing with this transaction platform versus messages that are going very linearly, and adding these other enriched services where you can access it, whether you're looking at you use an ISO or API channel to get to it, or even if you're still restricted to using old message types, there's a lot of changes that you're advancing the SWIFT platform. There's a lot of changes and innovation happening in fintechs. What is SWIFT doing to make sure that they're staying current on innovation? What's happening here to continue to invest in these transformative developments? You shared a lot already, but I didn't know if there's anything else that you wanted to share.
Sure. So innovation has always been part of our DNA, and our platform has constantly evolved over the years to meet the needs of our clients. So when we first started as a consortium, we helped the industry move from telex to electronic messaging. Then in 2017, we added in this tracking and tracing of payments with GPI. And now we're moving from point-to-point messaging to transaction management. We're also adding in APIs as a channel next to traditional messaging. We co-create with our community to add new value-added services to solve challenges customers face every day. This purpose-led approach translates directly into how we run innovation projects. We invest in a balanced portfolio of industry initiatives and co-innovation sprints that aim to solve some of the biggest challenges, like simplifying the industry's journey to the cloud, delivering the next generation of real-time standardized API-based services, and even reducing fraud and money laundering while keeping costs down. This is what we like to call responsible innovation. We have built a great amount of trust with our customers over the years, which allows us to foster collaboration with a diverse set of institutions. We are really proud of the trust we've developed with our customers and take this responsibility very seriously.
Yeah. So Kalyani, what's the value of the SWIFT network, especially if you've added these services? Where do banks see that, and where might corporates see that?
So actually, before I joined Swift, I worked at Deutsche Bank for 18 years in cash management. And coming from a big bank like that, we used to spend a lot of money developing our own systems, maintaining them, upgrading them. And the value of Swift to our 11,000 institutions, especially now with the upgraded platform that we're going to be offering next year, is we are taking a lot of these services and products that banks typically do individually and they pay for individually and work on individually. We're moving those into the center of the platform. So things like pre-validation, sanction screening, data analytics, transaction tracking, all of those items that banks would have normally done themselves, we're bringing into the center and then standardizing them. So the access to all of the banks will be the same. And then if I think of a corporate, what we're really starting to see is more and more banks are then taking these, what we call mutualized services, bringing them into their electronic banking platforms, and then making those widely available to their corporate clients. And that, I think, is the power of the network, and why corporates are going to be just excited about the platform, as well as our financial institutions.
Interesting. So the traditional, what's the value of a network? It's the size of the network. It's what you can do on the network. And so some of this is, it also makes more banks able to offer better, more enriched services across the whole of the corporate community. It's not just the $1 trillion banks who can do everything. It's now it's 11,000 banks globally that can leverage this network and all of their customers. So what does a banking payment professional need to think about, given that there's so many changes taking place now, from requirements for API, this focus on faster payments, the increase in the sanctions and compliance arena, and you mentioned fraud. These are all massive concerns, all with a significant number of changes. How should they be thinking about this?
So these are clearly exciting but challenging times and can be a bit overwhelming. Individual institutions cannot solve all of these challenges today. The industry really needs to unite and collaborate and innovate to solve industry-wide challenges and build solutions that are mutually beneficial to all, like we just talked about in kind of the previous example. The move to digital also involves a change in company culture. So it's not just involving a technical transformation, but requires a mind shift involving agile cooperation models and products that are easy to implement. We've spoken a lot about moving to APIs. Not only are they easier to implement, have a lower tech footprint, but they also play a transformative role in creating digital customer experiences. Another topic, ISO 20022, which will enable richer and more structured data in the creation of end-to-end digital processes. Quality data enables payments to happen faster and more seamlessly, makes compliance more effective and efficient, and facilitates business growth. High-quality payment data is also essential for AI, machine learning tools, to be able to work effectively and derive insights and values from large data sets. You also need to ensure you have a strong payments infrastructure for an effective approach to cybersecurity. Organizations need to ensure on an ongoing basis they are putting in place strong detection measures. This includes real-time monitoring, alerting and blocking of suspicious outgoing payments, and implementing independent daily reporting. Finally, we have to look at risk management, specifically using attestation data for counterparty risk management. Whatever route an organization takes, it is vital to confirm that they are only doing business with trusted counterparties.
I always think of, how do banks stay unique and relevant if many of the services become standardized? And I think it has to involve what enriched data they can do, additional services, quality of execution, and probably more. But let's move on to any of your closing thoughts or comments. We've talked about innovation, the new payment transaction platform that Swift has. We talked about a new terminology like UTR as a tracking code, pre-validation. Any final comments?
I hope we've given your listeners some insights really on how exciting, this transformation is that's happening in payments, and how Swift has responded with our kind of updated strategy and now our upgraded platform that will be coming next year to facilitate the community with really bringing transaction management and orchestration as a concept, moving away from point-to-point messaging, and also helping the community with the ISO migration, which is going to be key to be able to take that rich data, and the use cases for that for the banks, is limitless. We don't even know yet because we haven't been able to get our hands on that data to see what we can do with it. But I've really enjoyed our conversation and look forward to continue the conversation.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.